Get the latest on what's going on this earnings season, meets, beats, and more in Zach's Earnings Scorecard.
Let's take a look at some consumer companies now and how their earnings may come in during the second quarter reporting season with Eric Dutram, who heads up our Zach's Surprise Trader service here. So you're always looking for surprises both to the upside and the downside.
That's right. And this time we're looking at some of the biggest consumer names out there. Coca-Cola headlines this list. The company has had a little bit dicey run here. More competition. Some people aren't liking soda as much. They're shifting to other, less carbonated beverages and other items. So it's going to be an interesting report for the company. If we look to the chart, though, the company has a pretty great track record when it comes to earnings season. Hasn't missed in this entire 5-year period. But if we look to the earnings estimates, we can see that they've really fizzled out here. The earnings estimates have fallen for both 2016 and 2017, and we're now in this lower range for both the time periods. This is despite the stock kind of running up here into this mid 40s range. So while the stock has a Zacks rank 3 and an F for its VGM score, I'm not really liking this one for earnings season based on some of these falling numbers. I think this could be one to avoid despite just being a hold rank. So I think investors might want to look elsewhere if they're thinking about making a play in the consumer space this quarter.
Investors might see a hiccup here.
That's true.
For the record, I still get the tall glass, by the way. So just wanted everybody to know that. All right, McDonald's.
McDonald's is up next.
Yep.
They have a very interesting track record here. The company was really struggling for a couple of years. They made some interesting changes. I know they're moving more or less down the street from us here in Chicago.
Yeah.
And they've really focused more on their breakfast and some of their other sandwiches as of late.
Many people would argue they've forgotten about the kids.
Well, maybe they have, but they've really been seeing some good gains out of their breakfast all day stuff. So maybe they don't care about the kids' meals as much.
Yeah.
But maybe they need a breakfast kids meal. But
okay. We'll take that to them.
But the trend here, if we look to their chart over the last couple of years, is it's pretty impressive, where the earnings estimates were falling for a couple of years here, and the stock was mired in this 84 to 100 range for quite some time. But as we can see, in this last maybe year and a half, it had a nice streak of earnings beats right here. And this really propelled this company up into new heights, into this 125, 130 range. However, earnings estimates have started to fall back a little bit here, sliding just a tad. It does have a Zacks rank 3 and a C VGM score, so not great metrics coming into this report. The competition really is starting to worry me. A lot of the other restaurant names that have been doing pretty well have really been struggling lately, so that's definitely a concern. The company does have a negative 1.5% earnings ESP, so that's also a concern for the company. So not really a great outlook here, but it's been hard to bet against this company given how they've really honed in on their business model and have really developed a lot of their other products.
All right. And now for something somewhat different, an apparel company thrown into the mix.
Yeah. Under Armour is also, they're still a consumer name, right? And they actually sort of fit in with this idea of companies that are kind of looking just okay this earnings season. Under Armour might fall in the footsteps of other apparel names that have really struggled this quarter. Nike didn't really have that great of a report, and Under Armour might be falling in their path, especially if we look to the chart here. We can see that while the company has beaten in basically every quarter in the last 5 years, earnings estimates have really fallen off here. We can see the 2016 number falling, and then the 2017 number falling as well. So this could yet again be a case where they have a pretty good track record at earnings season, but it doesn't really translate into profits. The company does have a F VGM score and a sell Zacks rank. So once again, this might be one to avoid for investors this earnings season.
Do you own either of these?
Do not.
All right. Hey, don't forget, you can check out earnings information on companies all the time on Zacks.com. You don't have to wait for the peak of the earnings reporting seasons to do that. We have earnings information up there all the time. Zacks.com. That's the home page that you can link to it all from. With Eric, I'm Terry Ruffalo.